Hello and welcome to Executive Mosaic's video interview series. I'm Summer Myatt, and here to speak with me today is Juan Zarate, Global Co-Managing Partner and Chief Strategy Officer for K2 Integrity and former Assistant Secretary of the Treasury for Terrorist Financing and Financial Crimes. Juan, thank you so much for joining us today.
Of course, Summer. It's great to be with you.
So Juan, you've also served as an independent advisor for Coinbase, a cryptocurrency exchange platform, for nearly a decade. Can you explain the state of the cryptocurrency landscape in the US right now?
Well, it's fascinating. I think you can't go a day where you don't read a front page story about crypto or don't see regulators talking about it. Obviously, we have President Biden just issuing the executive order on digital assets and crypto. And so the way I like to think of it is we've crossed the Rubicon of legitimacy here for the crypto economy. For a long time, and when I started with Coinbase back in 2014, near their founding, crypto was kind of a niche technology. Not many people knew about it. It was kind of an oddity, and over time, it increased in both capacity, awareness, adoption to a certain extent. But really, what we've had over the last year and a half is an explosion of awareness and adoption and legitimacy that has then forced some tough and good questions. What are the risks associated with this systemically in terms of consumer protection and fraud, in terms of anti-money laundering controls and sanctions controls? How do these technologies get regulated, right? And how do the institutions that enable the technologies like virtual asset service providers or exchanges get regulated? And then how do we think about these things strategically? What is the US role in this environment? Does the Federal Reserve issue a digital dollar, which is a big question that is being contemplated? How does this relate to the digital yuan that the Chinese have issued and are trying to use, or the crypto ruble, or these other central bank digital currencies? So we're at really the nascent stage of this industry, and we're facing a degree of maturity that is something like we saw with the internet, with the adoption of the internet. What are the rules? What are the players? What's the infrastructure? While it's reshaping the financial landscape as a new financial system, potentially new types of financial assets. All of that makes it fascinating, makes it risky to a certain extent, and also ripe with opportunity.
You mentioned the growing legitimacy of cryptocurrency, and we know in January, the Federal Reserve released a white paper examining the pros and cons of adopting a central bank digital currency. How would the creation of a central bank digital currency or digital dollar affect the American economy? And what new trends could we expect to see in that space if the US embraces digital currency?
It's a great question. And the question as to whether or not the US will adopt the digital dollar was echoed in President Biden's executive order as well. What's interesting here is a debate, I think, in the American context as to whether or not you actually want the central bank to issue a digital dollar. There are stable coins that are in the marketplace, issued by Tether, issued by Circle, USDC, and others. We recently saw that Silvergate bought the technology and the elements of a potential stable coin from the DM networks that Facebook had launched. So there's an opportunity in the American marketplace to have multiple stable coins, multiple coins that are backed by the dollar, that in some ways would not necessitate a central bank digital currency. But the idea behind a central bank digital currency is to have the government be able to issue a digital cryptocurrency that is equivalent to fiat, that has the same level of trust and confidence as fiat currency, that could then be used as an asset class for the central bank, that could then be used to trade and to mix in the American economy. And it would, in essence, be more than just digitizing the dollar. It would be adopting the technologies that are part of the infrastructure of the crypto economy. And what's interesting there is if the US does that, how it then links to other central bank digital currencies that are emerging or that are contemplated. And that's something that the G7, the G10, and others will have to contemplate. But at this point in the US, it's still a question. It's a fundamental question as to whether or not it would be done. And we know from the Fed's paper that they have articulated that this would be a momentous step for the US financial system and certainly for the Federal Reserve to make that decision. That decision hasn't been made, but it's being studied.
Mm-hmm. And switching to more of a global lens now, the situation in Russia and Ukraine has already had widespread financial and economic impact just over the past 2 weeks. Now, with the value of the ruble plummeting, what role does cryptocurrency currently play in Russia's economic landscape, and how does that affect the US?
It's a good question. We just published this week a client alert on the potential for crypto to be an outlet for the Russian economy or those targeted by sanctions. I think you have to look at this at several levels. You don't have a crypto economy in Russia that's wholly mature and that could serve as a whole alternate, if you will, to the formal economy, to the extent that the formal financial system is being unplugged from the international financial and commercial world. So it's not as if you can, the Russian central bank can immediately shift all its reserves to crypto, or that all elements of the Russian economy that now can't pay using Visa or can't tie into the various rails, for example, with SWIFT, can suddenly do this in mass and at volume and scale with crypto. But you do see and could see that you have targets like the individual oligarchs that are targeted, trying to shift some of their assets into the crypto domain to make them less likely to be noticed or seized, perhaps, or frozen, but also to create some diversity as to where their assets are. The oligarchs' assets, those that have been listed and designated by the US, UK, and others, they're having their assets frozen, they're having their yachts seized, they're having their planes tracked. So it's uncomfortable. And so you could see them retreating to an asset class that they may think gives them a greater degree of freedom and autonomy and anonymity. The challenge there, of course, is US law enforcement and others around the world have demonstrated that if you're on the open ledger, if you're using Bitcoin or Ethereum, your wallet can be not only spotted, but tracked and frozen. Crypto assets can be clawed back. We've seen that in ransomware cases. The Department of Justice just had a $3.6 billion recovery of Bitcoin and crypto. So it's not quite the safe haven that folks would think about, and certainly savvy investors and government authorities understand that. And I think for the Russian central bank and the Russian authorities, they would feel somewhat uncomfortable in putting a significant part of the state assets of any sort into crypto, in part because they don't control it. This is why autocratic states have tried to drive toward controlling and centralizing the crypto economy. This is why in China, they've outlawed Bitcoin, but are promoting the digital yuan. They can control the digital yuan and the infrastructure and the data that's attached to it. They can't control the Bitcoin distributed ledger because it's universal and it's not government controlled, at least in those countries. So crypto does provide a bit of an outlet. You're going to see cyber criminals, certainly out of Russia, use ransomware attacks and try to profit from it. You may see some oligarchs move some assets here or there, but there's a lot of vigilance there. There's going to be tracking in that space as well. And I don't think the crypto economy is mature enough, certainly not in Russia, to serve as an outlet for wholesale economic conversion or sanctions evasion.
So this element of evasion of detection is very interesting. And I'm wondering how the US is working to enforce sanctions across Russian cryptocurrency transactions.
Well, what you've seen is a maturation over the last couple of years with the Office of Foreign Assets Control, US law enforcement, and US banking regulators recognizing that there are opportunities to actually trace and enforce anti-money laundering laws and sanctions in the crypto ecosystem. Now, there are pockets of that ecosystem that are hard to crack, that sit behind veils of privacy or secrecy that are very difficult to get behind. But we've seen with US law enforcement and certainly with Treasury Department officials and OFAC, a desire to try to use analytics and to use investigatory tools to try to understand where nefarious actors, illicit actors, criminals are using crypto, how they're moving it, with whom they're interacting. So in this case, you have US government agencies talking to regulated entities, talking to not just banks, but to virtual asset service providers to ensure that there's vigilance across the spectrum and vigilance as to where the institutions themselves may see a flight toward crypto as a way to evade sanctions. And so in many ways, this is just another category of venue for potential sanctions evasion. And so you're going to have red flags going out, a lot of discussions as to what this looks like. I imagine quite a bit of information exchange. And we know that Coinbase, with whom I've been an advisor, has already shut down 25,000 accounts tied to Russian actors as part of their risk management in the Russian context. So there's a lot of maturation still to be had, but you have regulatory agencies, you have OFAC, you have law enforcement trying to do a better job of tracking and tracing the trail of crypto in an ecosystem that's often hard to manage.
And Juan, finally, in your book, Treasury's War, The Unleashing of a New Era of Financial Warfare, you wrote that in order to regain its relative power position, the US must redefine national security along economic lines. Have we accomplished this, or are we still lagging behind?
It's a great question. Thank you for mentioning the book. I think we're still lagging behind, but this episode and the war that Russia is waging on Ukraine and the sanctions response and the pullout of the private sector, not all private companies, obviously, but many, points to the fact that I make in the book, which is the domain of economic and financial competition is also a domain of conflict. And in competition and conflict with great powers like China and powers like Russia, this is part of that competition and conflict. We're seeing it play out quite obviously, given the war in Ukraine and the massive and quick response from the US and the European Union and others with sanctions, with financial tools, with economic isolation. And we know that President Putin sees this as a dimension of war. He himself has said that just recently, that he sees the sanctions as an act of war. In 2014, after the Russian invasion of Crimea, you had Russian officials saying that the removal of Russian banks from the SWIFT bank messaging system would be considered an act of war. So we are in that domain. The US, though, is still not fully mature in thinking through the spectrum of tools and authorities that play in that domain. So it's certainly sanctions, and we think about sanctions first and foremost, but it's also the anti-money laundering system that requires transparency, traceability, accountability in the financial system. It's all the tools of anti-corruption. And we've seen the Biden administration begin to talk about anti-corruption as a key element of national security. It's our trade tools. It's our investment security through CFIUS and FIRMA. It's our export controls, which form a part of the response to Russia. It's also the positive economic influence and investment that the government, in concert with the private sector, can bring to bear in competition with the Chinese and the Russians and others. So it's an entire suite of tools that we have in the economic and financial domain, which in the American context, we've often divided between public and private. We're now in a period where that divide is blurred, and we need to be thinking about this domain much more aggressively as a domain of conflict. That's part of the message of Treasury's war, and it's why in chapter 16, the last chapter, I labeled it the coming financial wars, because you could forecast that we would have a moment like this with Russia, and we may have a moment like this, or hopefully not quite so extreme, with a country like China. And we have to be prepared with the tools of economic security that allow us to influence events in a way that doesn't require us to use military force.
Very interesting. Well, Juan, thank you so much for sharing your insights with us today. We really appreciate getting to hear from you.
Thank you, Summer. I appreciate you giving me this venue, and look forward to the next time.